Welcome to the Chicago Money Show. We help you bring more money, more meaning, and more happiness to your life. I'm your host, Bridget Sullivan Mermel, and I own a fee-only financial planning practice in Chicago. Noel Lorenzana is a CPA who helps to simplify taxes for entrepreneurs and individuals. He's a graduate of our own University of Chicago, Illinois, Chicago, and he's also got a YouTube channel where he answers viewers' questions on taxes called Ask an Accountant. He will help you make filing your taxes in 2022 painless. Today we'll talk about the latest in taxes, including the Secure Act 2.0. That's legislation that passed right before Christmas. He's got a lot to say about finding balance between money, meaning, and happiness, and he'll help us figure it out too. Welcome, Noel.
Thank you for having me on, Bridget. It's a pleasure and an honor to be here.
Great. So let's get going right away. A viewer asked me, I heard it shouldn't cost you any money to get your taxes done. For whom is that true? Why don't you tell me more about it?
Okay, so a lot of companies, tax preparation software companies, will offer free tax preparation. Those services are generally limited to people who have a simple tax return. And that would be something like W-2 income, maybe limited interest that's reported on a 1099 INT, limited dividend income that's reported on a 1099 DIV, maybe student loan interest, definitely the standard deduction, not itemizing deductions, and maybe the child tax credit. I would consider that a simple tax return. Now there's a couple ways to get a free tax return prepared. You know, if you want to believe that nothing is free, keep that in mind, but the IRS does offer a free file service. You could find that on their website. They offer 2 tiers of services. One is guided tax preparation. So if you're under a certain income limit, they partner with third-party providers who offer that service. And if you don't qualify for that for some reason, they have a free file fillable service, which is basically filling the forms like you would with a PDF document. It does all the math for you and has most of the forms.
Okay, great.
But you'd have to know where the numbers go, and that's kind of a challenging part for some people.
I see. So then in that case, sometimes people want to pay for online software that helps them fill out the return and helps them prompt them. So tell me more about that.
Okay, so if somebody is already doing their own taxes on their own, then there's no problem. They should keep on doing that if they're comfortable with their tax situation. I would recommend for people who are doing their own taxes, every couple of years, maybe take it to a tax professional, have them look it over, make sure they're doing things correctly and not missing any deductions or credits. They'll probably charge you for the service. Some providers might not charge you for a free second look. I know they've offered that in the past with some companies. But if somebody's tax situation is complex and they're not comfortable doing that on their own, then they should definitely look to hiring a tax professional.
Yeah, okay, so when do you go to the step of hiring an actual CPA or other person who's really a tax preparer, an actual person?
Generally, if their situation is complex, and that would be something like if they owned a business, if they had stock sales, maybe they had crypto investments or digital assets, that reporting has become very strict with the IRS. Rental properties is another big one.
Right.
And generally something they're not comfortable doing on their own.
Okay. And how do you work with a CPA? Can you just ask them questions whenever, or what's your 2 cents on that?
So generally, if somebody hires a tax professional or a CPA to prepare their taxes, it's usually a one and done type of engagement. So you hire them to prepare your taxes for this upcoming year, 2022 tax returns. You'd pay them for that service. And it depends. Everyone is a little different. They may offer some limited support throughout the year. Some might not. But it all depends. But if you do work with a tax professional, you should be able to call them throughout the year and ask quick questions either by phone or by email.
Okay. Now, a viewer asked, if I use TurboTax or H&R Block or one of the other services, should I pay for the extra add-ons like audit assurance so that they say they'll help you out if you get audited? What are your thoughts on that?
Yeah, so those are generally called audit protection plans. I've offered that in the past in my firm, and I think it was really worthwhile. But I'd read the fine print, I would take each one on a case-by-case basis to see what's included, what isn't included. So for example, when I offered it, it would include IRS notices or state tax notices that you'd receive after you filed your tax return. And those aren't technically audits,
Right.
but those come quite often. Maybe the IRS wants to verify some information, or needs clarification on something, or it's just something that the taxpayer is not comfortable with. If that's covered, I think it's totally worthwhile because these audit protection plans usually start at somewhere around $80, $90.
Yeah.
And it also covers extensive audits as well.
Right. But let's just talk about who gets audited. When I had my tax practice, and so this goes back a few years, but what I would tell people is that think about the IRS as a big computer in the sky. And the IRS and that computer is getting a tax return from you, and then they're getting forms from other places like your W-2, your company is giving them the W-2, your bank, et cetera. And they will notify you if they see something that's different.
Right.
Okay? So that's getting a notice. That's not getting an audit, that's just getting a notice. That means you forgot to report a stock sale, or you forgot to put something on, here's your notice. And the only thing they don't have that they're not getting from an outside source really is if you have a business, or because then you've got income and expenses, and they have no idea what your expenses are. They could make something up for you if you want them to. Same with rental property. They have no idea what your income is or what your expenses are. So that's when you start getting into maybe I will be audited, okay, if you have those things happening. But for people that just have W-2s, I haven't heard about many of them getting audited.
No, generally they wouldn't be audit candidates.
Yeah.
But if they want the peace of mind to have their tax professional or a service that they're working with handle these IRS notices that invariably have been coming a lot more frequently, to have them handle that for you, it might be worthwhile.
Right, because anytime somebody gets a notice, their blood pressure goes up, et cetera. It's like a stressful thing, and a lot of times people, it's hard, it's almost like the notice is hieroglyphics. It's hard to sort it out, it can be hard for us to figure out what it's about, much less a client. Okay, so what about Venmo and Etsy?
So Venmo,
so people have businesses now, and they don't necessarily even think about it.
Yeah, so this year, the American Rescue Plan Act of 2021 introduced a new filing threshold for 1099-Ks, which reduced the filing threshold to $600. And previously it was $20,000 in 200 transactions. So this upset a lot of people because if you were selling something on eBay or Etsy in excess of $600, you would potentially receive a Form 1099-K. And it's a very low threshold, and it upset a lot of people. That includes any payments that you received through PayPal, Venmo, and Cash App.
Okay.
And it could be just a personal transfer to a friend.
Oh, I see.
And things like that might trigger that 1099-K.
Right, because you could send your friend $600 or $601. Right. Okay.
Right. And it was so new that people weren't sure how to handle it. Would they get a 1099-K? Would they not? So surprisingly, December 23rd, 2022, just last month, the IRS came out and said they were going to suspend this law until 2023. So you wouldn't get a 1099-K with this new $600 filing threshold, but you will for 2023, the year that we're currently in.
Cool. All right, so we're going to take a break here. Just a reminder, we're here with Noel Lorenzana, and we'll be back shortly to talk about the latest in tax changes and legislation. Stay tuned. We're back with tax expert Noel Lorenzana. Okay, so let's talk about the tax highlights and changes for 2022.
So yeah, there's a lot of tax updates for 2022. As you know, the COVID-19 provisions, a lot of them, well, most of them have expired. And I'll just go down this list that we have on this handout, which will be on your screen. Expired, the child tax credit expansion, the increase in refundability, that's expired for 2022, so that's no longer there, including the advanced child tax credit payments. We had that last year. You needed to reconcile that on your tax return. That's gone.
Okay. So that's going to be, do you need to reconcile it on your tax return in 2020, for 2022, or is that just totally gone?
It's gone. There were no advanced child tax credit payments. So to speak more on the child tax credit for 2022, we have another slide for this.
Okay, great. We'll talk about it in a second. Okay, great.
And so basically 17-year-olds are no longer eligible as qualifying children.
Okay.
The credit amount goes back to $2,000. Previously, last year, it was $3,000 and $3,600. It's no longer fully refundable. The maximum is $1,500 per child. And as you know, refundable means that if you don't have a tax liability, then you're not eligible or you can't take the credit. And
Right. So if you don't owe any taxes, you don't get the credit.
Exactly.
Okay, and that's actually a major change because people were getting it before, even if they, like, so you could owe zero in taxes. And people, there's a misunderstanding about what owing zero in taxes means. That means that your income is zero and you actually are paying no federal taxes.
Exactly.
Which is different than you don't owe any money. Or when so people were owing no taxes and just getting a refund that was just the child tax credit.
Right. So if your total tax was zero, then if a credit was refundable, then you wouldn't get the credit.
Right. You don't anymore. Right. Okay.
Right.
And you also mentioned the maximum that you can get. So is it $1,500 a child, or is it $2,000 a child? I'm sorry, I was a little confused.
Oh, okay. So the credit goes back to $2,000.
Okay.
And up to $1,500 is refundable.
Oh, okay, great. So the credit is partially refundable. Okay, great.
Right.
Okay, onward.
And like I mentioned a second ago, no advanced child tax credit payments need to be reconciled for 2022 because that went away.
Okay.
And the phase-out amounts go back to the previous amounts.
Okay.
Which was $200,000 for single filers and $400,000 for married couples.
Right, so it's generous. A lot of people get the child tax credit when before they were not getting it. Right. And then it was beefed up during COVID, but the beef up is gone, but it's still there.
Right.
Okay.
Exactly. So next on the list is charitable contributions, deduction for non-itemizers. So that's expired, and what that was is even if you didn't itemize your deductions, you could still take a charitable cash contribution of $300 or $600
right.
Without having to itemize your deductions. Right. That's gone. If you have charitable contributions, you need to be able to itemize your deductions on your tax return to take advantage of that.
Right.
Next up is the child and dependent care exemption. The child and dependent care expansion. And
so this is separate from the child care credit.
Right, exactly.
So this is about if you're paying for somebody to help you with watch your kids.
While you work or look for work, exactly.
Yeah.
So so we have a handout for this, which should be on the screen, and the expense limitation for one child is $3,000. Last year it was $8,000, so it's a big difference. For 2+ children, it's currently $6,000. Prior to this, in 2021, it was $16,000.
Okay.
It's not refundable. It was fully refundable in 2021, and the applicable percentage is now 35%, not 50%, as it was last year.
Interesting. Okay, great.
Other expired tax changes for 2022 is unemployment benefits. As you probably recall, in 2020, up to $10,200 of that was not taxable. So now it's fully taxable.
Right.
Also expired are the earned income tax credit expansion and use of the prior year income for the calculation.
Oh, I see. Okay.
So we're back to the original rules, and also expired are the recovery rebate credits, which were stimulus payments 1, 2, and 3.
Oh, the extra stimulus payments, yeah, but those
Yeah.
are just over, right?
Right. So that's ended. We didn't have any of that for 2022, so taxpayers don't have to worry about reconciling that on their tax return.
Right, that'll be easier. In earned income credit, that's probably still refundable. So that means that even if you don't owe any tax, if you're eligible for the earned income credit, you can probably still file your taxes and get some money back.
Right, exactly.
Awesome.
So some new tax updates are worth mentioning are the marketplace health insurance premium tax credit.
Okay.
So if somebody purchased an insurance policy through the Affordable Care Act, through the marketplace, and received a premium tax credit,
Okay.
they would need to, as in previous years, they need to reconcile that on their tax return. They might have to pay some of it back, or they might be able to get a bigger premium tax credit in the form of a refund on their tax return. But the big change is, from what I've heard, is if you e-file a return and you're required to have that form on your tax return, Form 8962, reconciling the premium tax credit, if it's not there, your e-file tax return will be rejected.
Okay.
And if you paper file your return, any refund or tax return processing will be delayed.
Yeah, and you don't really want to get a notice either. So it's a good idea to actually fill out that form, even though it might be a little bit complicated.
Right. In previous years, it's something that people commonly missed.
Yeah.
And the IRS would send a notice saying,
Hey,
you need to file Form 8962. You missed it. Send it in as soon as possible.
Yeah, but if you do your taxes with a software program like we were talking about in our first segment, or if you have a tax preparer do it, they'll know. And the software should flag you. Okay, here's the stuff you need.
It might.
Okay,
It might.
we'll
It might
double check.
not. A lot of times, if I'm preparing someone's taxes, I have no idea if they purchased marketplace health insurance.
Oh, okay.
They might have 1 year, they might not have this year. So I like to have them fill out a client organizer. It asks all those questions,
Right.
but nobody really fills those out, right?
Yeah, and sometimes like, what is that? Like, it's
Right.
right. Interesting.
And the last item was that we already talked about this, is the 1099K reporting threshold, $600. So that's postponed for 1 year, but that is new for 2022.
Great, awesome. So I've got some also, we want to talk about at the end of December, the Secure Act 2.0 passed. And if we have a visual for that too, and that has some provisions that I want people to know about too. So the first thing is that there's a change in when people need to start taking money from their IRA. And again, we'll put it up on the screen. Basically, what's happening is that over several years, it's going to change from the current age to 75. And so how that works, we want to make sure that people understand. And so if you're 71 or 72, heads up. Okay, and that's again taking required minimum distributions from their IRA. And there's a few other changes. I just want to put that on the screen too. Another thing is that even though the required minimum distribution is changing, the age is changing, the age where you can take what's called a qualified charitable distribution, that's writing a check from your IRA directly to charities. Which counts as a required minimum distribution. But even if you want to do that, you can do that still at age 70 and a half. So there's two different ages now, which is a little bit confusing, but it's still a good opportunity for people, particularly if they can't itemize, to send money to charity in a tax-advantaged way. And the other quick things, and these go into effect in 2024, so you have some time to think about it. The things that go into effect in 2024 are first, there's a new provision with 529s, so the college 529 plans. If you have more money in them than you intended and your child didn't go to college or didn't spend as much in college and is not going to use it, and you could use it for your retirement, or you want to give it to your child, there's provisions so you can convert your 529 to Roth IRAs. They have put a lot of structures around those provisions so that it's not a way for people, super savers, to just save more, put money in your 529s. But if you're in that situation, I want to look into it because it's a great plan. The next thing is that there's going to be changes again in the 401ks For people who are over 50, they'll need to be careful about adding more money and catch-up contributions to their 401ks if they make over a certain amount of money. And I think it's around 150,000. It might be 145. So higher earners that are going to need to have their heads up, that like to put a lot of money into 401k, the super savers,
Right.
Are going to need to have their heads up. Again, in 2024, you're good for this year. So great, another time, a good time for a break. We'll be back talking with Noel Lorenzana when we return. I'm Bridget Sullivan Mermel, here with Noel Lorenzana, CPA and tax expert. This show focuses on money, yes, but we also focus on meaning and happiness. So how do you find happiness and meaning with money when you started out with the tax practice?
Well, money is obviously important. It's a tool. We all need it in life to survive, pay our bills, pay for our homes and our roofs over our head. And they say money can't buy happiness, but by having money or savings, it allows you to have a little bit of freedom, and allow me to explain.
Yeah.
So when I quit my 9-to-5 about 8 years ago, it was a sudden change in my life. I had to figure out, am I gonna fix up my resume and start shopping for another job in maybe downtown, or am I gonna try to do something on my own? So fortunately, I had a savings account that I could, or a savings fund that I could fall back upon and use that during the lean times while I was, building my own tax and accounting practice.
Yeah.
And without that, without the savings account or savings fund, I wouldn't be able to do that because I would need to replace my income right away.
Right.
So to me, money is important. Saving money is even more important. So money can't buy happiness, but it can buy you freedom. And if freedom doesn't pave the way for happiness, I don't know what does.
Right, it can give you freedom and a sense of security too. And I think that the research on money and happiness is that money does is correlated with higher happiness, but there's diminishing returns after a certain amount of money.
Right.
So, and in 2012, when they figured this out, they said it was about $40,000 a year for an individual and $75,000 a year for a household. So you can figure out for yourself if you think that's a lot of money or a little bit of money. But getting to that point gives you a lot of autonomy, and you're making choices, and hopefully you should be able to stop living paycheck to paycheck, which is what you're talking about.
Definitely.
It's and being autonomous and being able to be proactive with money. I think it's a great feeling, to be able to make your own decisions with it. But it also sounds like when you started your practice, you wanted to, and we've just got about 30 seconds left, but you really focused on balance.
Yes, work-life balance was a huge priority for me. At the time, I had 2 young children at home, 1 and a 3-year-old. So I wanted to be there, present for them in their upbringing. So working for myself and having that autonomy and freedom was very important to me.
Great. So Noel Lorenzana, thank you so much for being with me today. And if people want to find out more about you, where should they go to find out?
Thanks, Bridget. Thanks so much for having me on today. Probably the best way to reach me is through my YouTube channel. It's under my own name, Noel Lorenzana CPA, Ask an Accountant. You can leave a comment there. You could watch any of my videos. And that's pretty much the best way to reach me.
Awesome. Thank you. My name's Bridget Sullivan Mermel. I've got a fee-only financial planning practice and a YouTube channel too. And that's called Friends Talk Financial Planning. We've got more videos with detailed information about Secure Act 2.0, as well as a qualified charitable distribution, which we talked about today. Check out this show's website at chicagomoneyshow.com. And there you can sign up for our newsletter so that you get a heads up on upcoming shows. If you've got questions on this episode or for future episodes, please email us at chicagomoneyshow.com. Thanks for watching.